For more on why Treasury yields are at their highest since November, let's head to Rochester, New York, and Jack Bauer, Managing Director of Fixed Income over at Manning & Napier. Jack, good to have you with us. Good afternoon.
Great to be here today.
You know, how would you describe the trade? We keep saying a wild trade in Treasuries. How would you describe it?
Well, they're tracking off of what's been going on with the releases. They've improved. They're still negative, but they've improved marginally from where they were at the start of the year. Instead of 700,000 jobs being lost, we lost 345,000. So it's the direction of the trade rather than the absolute number. The other thing is, if you drill into the numbers in terms of the details, some of the leading indicators are suggesting this might not be a one-off. One of the things you like to follow is what's going on with temporary employment. It had been dropping pretty substantially each month. It was relatively flat month over month. That's a good leading indicator. Within the unemployment number itself, the labor force, it grew by 350,000. So more people are feeling optimistic, entering the labor force, looking for jobs. So those are some leading indicators that you can feel positive about for releases going forward.
Jack, what about, though, we dig deeper as well, and, you know, the real unemployment rate stands at about 16.4%. That's up from 15.8% in April. You know, that's all the people who would like a job, but they basically couldn't find one, so they've given up looking. That doesn't sound so promising. And you also had some other data points, discouraged workers. Again, that index from 10.1 to 10.6 in the latest month. So, you know, this is kind of a mixed bag of data, isn't it?
Yes, I would agree with you. I mean, a part of what's going on is improvement. It's always in the rate of change as opposed to the absolute numbers. So the patient needs to improve before it can actually start to get healthy. But yes, if you look at the numbers, they're still pretty dismal. You know, having said that, one of the other things which is helping outside of the Treasury market, Treasury yields are going up because people are swapping out of Treasuries, looking into the corporate bond market, looking to the high yield market, looking through the mortgage pass-through market.
You know, Jack, what's more important, though, the move in the 10 or the move in the 2? And I guess I bring up the 10-year because so many rates are tied to that. And, you know, everybody's also been talking a lot about mortgage rates and how much they've been jumping up.
Sure. I think right now probably the 10-year, the ground zero, the biggest problems were in the mortgage housing sector. When you look back in time, it appears as if we found a bottom. But with mortgage rates drifting up over the last couple weeks, that could create some issues going forward. So I think you want to focus in more on the 10-year and the impact it would have on mortgage rates and on other lending rates in general.
All right, so what do you think this means, though? Because there is some speculation that, well, maybe the Fed could think about raising rates later this year. Is it too early, Jack, in your view, to even start thinking about that, despite the moves we're seeing in the Treasury market?
Oh, yeah, I wouldn't anticipate any action by the Federal Reserve on the short end of the curve until well into 2010. We're talking about a patient that was essentially at death's door. It's still in the ICU. Unit. It has to improve materially. We might get some modest growth in the second half of the year, but in terms of raising short-term rates, the Fed funds target, that's a 2010 event at the earliest.
Jack, 5 seconds here. Strategy. Is there a Treasury play here in your view? Just quickly.
Sure. I think you can nibble a little on the long end. We're not that concerned about inflation in the near term. These rates have jumped up dramatically over the last couple weeks. Okay. So there's a little bit of short-term trade there.
All right, we got to run. Jack, thank you so much. Jack Bauer.
Oh, my pleasure.
At Manning & Napier.